Hey, it's Mac with PriceActionTradingSystem.com, and it is Tuesday. It's June 23rd. This will be our chart lesson for the day, and it was just a range day. We traded up. Let me back out just a hair here. We traded up into this, and then we kind of got stuck in this range here, and we actually broke higher. Um, we actually broke up into this tighter range, and then we just kind of made an equal distance up and a little failed breakout, and then we traded back down. We had a nice little trend channel working down. Most of it was into the 2 o'clock hour, though. Of course, if you're already managing a trade into the 2 o'clock, I don't have any problem with you trading it on. Just don't enter any new trades because you don't have much time left and you don't want to get stuck in a trade. Sometimes you get some good moves like we did today, but a lot of times you'll get stuck in a trade and it'll just go sideways. And the biggest thing is you don't have much time. Not only do you not have much time, but what'll happen is you don't have, if you did make a mistake in the afternoon, you don't have time to make it back. It just seems like the price action, I've never done any back test or anything to prove it, but just it feels like to me and most other traders I've talked to that trade consistently seem to think that the morning's better trading as well. For whatever reason, the price action's more orderly and you have less craziness, it seems like. So, and I believe that really to be because you have a lot of people that trade up until about lunchtime and then kind of fade off as the day goes on. So maybe that's got something to do with it. Maybe it doesn't. I don't know. But also, I hope I ordered a new set of headphones. I got here and they had great reviews and I paid a little extra money for them and they were total trash. So I'm back to, I made a few adjustments to my old microphone and I'm hoping I'm getting that we're back to the original quality of them. I had the little clicking noise or the beeping noise in them for a while, but I think I figured out what that was. I think I have that resolved. I may try to order another pair, but I'm sending these pair back. They're horrible. I mean, absolutely horrible. I probably could have got my soldering iron out and soldered up my own headphones. It would have worked better than those. They were absolute trash. So I thought I was going to upgrade on those, but it doesn't seem like that's the case. But these have always done well up until just recently, and I think the new software, the audio is just so perfectly clear and records so well. I think that's part of it. So, but I think I have this resolved. So we'll try these for a few days, and I may look at ordering some others. But the ones I ordered, they were terrible. So, but anyway, let's get back to the chart. We had the two-tiered channel working up. We had a little close outside, a couple legs up, and we trended down a little bit. There's a two-legged correction, so you had to be aware that we might try to make another measured leg up, which we didn't. And when you don't get a measured leg, generally you're going to trade off harder in the other direction. You can see that's what happened, but the more accurate one, a lot of times will be the secondary one, so I would have measured that one. And notice we didn't make it either. So when you don't make either one of your targets like that and you turn and start trading in the other direction, you can see we didn't get anywhere near that one and we didn't really get anywhere near that short-term one. And then it turns down and you get a really strong trend down the other way. And guess what? We filled that gap before the close. At least, well, we didn't fill it till after the close, but it was real close to filling that gap. And you'll see that almost all the time. And people ask me about this all the time. No, make sure you listen to this. No, there is no gap on this chart because this chart trades 24 hours. So you see it trade up and there's no gap on this chart. But if you go to a daily chart, this red line right here is where we closed yesterday. And this yellow line is where we open today. So that gap between there will be on the daily chart. And notice prices backed up and filled it. Quite often prices are going to fill those gaps really quickly. Sometimes the gaps may be the upside, sometimes they may be the low side, sometimes they may be huge. Like sometimes the gap's way down here and we open way up here. And I've seen it trade really quickly and just fall like a knife down there and fill that. We saw it just a few days ago. It seemed the market looked really strong. You're thinking there's no way we're going to fill the gap today, and we didn't. So And we didn't today either, really. We filled that gap, and prices tend to fill those gaps. So, no, you're not going to see the gap on this chart. So make sure you understand that. The gap is on the daily chart, but the daily chart's just as important as this chart. And this is a 24-hour chart, but the daily chart closes right here at 3:15 or whatever, and it opens up here at 8:30 Central Standard Time. So if prices traded way up during the overnight from the close of yesterday, there's going to be a gap between where we open and where we close the day before. If we close right here and prices trade down here and open way up down here, there's going to be a gap way above, and you're going to try to trade up to it most likely. So it's not rocket science at all. It's real simple, and just make sure you understand that. So we're talking about the daily chart, and if that's too hard to understand, go open a daily chart and you'll see it. So I've recommended that to a couple people because they, if you can't if it doesn't make sense, just go open a daily chart and you will see it. First thing you do in the morning is open this chart and then open a daily chart and look and see if there's prices are trading above where they closed or below where they closed the day before, and to see if there's a gap on the chart. And if there is, then it's likely to try to be filled. It's not 100%. Nothing's ever 100% in trading, but a high probability they fill those gaps. And you see, even today when you didn't think it looked like it was going to happen, it did. They basically filled that gap. So now that I wasted 6 minutes and something on that and the microphone, let's get to the trade. So let me back out a little bit. The trend was up first thing this morning. We're trending up. We had the break, and 7 o'clock came right in here. I believe it was, I can't remember exactly where it was now. I think it's right in here. Yeah, it's just right there where that's at. And notice what happened here is you had the break right here. And I believe it's right here, or it might have, it was, I think it was, no, it was over here where several people got tripped up, I think. We had a bunch of people trying to go long. I got a bunch of messages on that. People trying to go long right in here. And once you see that big of a move down, there's actually a shorter term trend line right there working down too. And we had people trying to get long down here. When you see prices feel this, and even if you got this wrong, even when you see prices trading real strongly down here like that, just wait to see what's going to happen. Draw that trend line and wait to see what's going to happen first before you start trying to buy. So people get too eager to, they're just hung on the trends up. And suddenly there's a break, well, they're automatically expecting 100% that we're going straight back up and test the highs. Well, it doesn't always work like that. This is a big leg down. You're likely to get a second leg down, and that's exactly what happened here. You got one leg down, and you got another leg down, and notice it didn't quite make it, and then we went and tried to make a new high, and eventually we got it right there, and then it sold off. So we know what the prices are likely to do, but we don't know exactly the timing of them. So don't trade on what you're thinking is going to happen. Trade on what you're seeing. And when you see a sell-off like that, just look how it fell through the EMA. No support, no nothing. Look how far it's trading down here. Something changed. Something major changed. So we could turn and go straight back up, but wait till you get confirmation of that. So you don't want to be buying any of this right here, not with this trend line working down. So just follow the price action and trade what you see, not what you think. It's not a literal set of rules that said if this happens you do this, 2 if this happens you do that, 3 if this happens you do that. It's not that literal. The rules are right about 90% of the time, but we don't always know the timing of them. And that's where most people get tripped up. They know what to kind of expect because they've read it or they've heard me say it a million times, but then it doesn't happen when they're expecting it to, and it throws them all out of whack. It's not that clear cut. So even though we know that after this correction here, we may still try to make a new high, You don't know exactly when that's going to happen, but I think we already had the break in the new high here, but a couple of other people drew their trend line a little different. Somebody asked me why I started here instead of here. Well, if you start right here, I'm not saying that's wrong, but you got to draw it through that price action. And generally you don't do that. I mean, that's really a triple bottom across there. So just find the lowest point you can get off of. Just basically you want your price action to fit. And you can see that midline it's fitting right there all the way up, and then we start to lose momentum and you get the break and a new high, and then it's trending the other way. So I believe that to be right. But irregardless, if you'd drawn it the other way, you still end up at the same spot making the new high after a two-legged correction. And this is where, after that two-legged correction, you might expect a possible measure leg up. Didn't happen today, but that's kind of what you would look for, and a lot of times it will. So just keep that in mind. But anyway, we're trading that. We get the break. There's actually a second entry long right there. You really could have entered right here, but it's an inside bar. It does have a matching low, and it is a second entry. So if you took that trade, I'm okay with it. I went back and forth about whether to mark it. It's a little bit aggressive because we had this double top right here, and we moved higher, and we came back down below it, and we're kind of trading into it. So that's, even though it's a second entry, that makes me a little bit leery of it. So wait on a higher low, which comes here, and then it takes off. That was the better entry. And then we run up here, and then it's like a knife falling. It just, the bottom drops out of it. When you see that sudden switch and you don't get any bounce here at the EMA and it's just dropping like a knife, something changed. Let that little light go off. Ding, ding, ding. Something changed. This doesn't look like it did over here at all. That's too big of a move without getting any support right there. Something's probably changed. It doesn't mean that we can't go higher, but that's your first alert. Something changed. And if you draw that trend line off those highs, you got to be careful. You don't want to be getting long into that. So if you get a good setup, you probably want to go short. So we're working up. There's a second entry short right there, but you haven't had a break of this trend line going up. Signal bars, you're really getting, if you use that one, it's too bullish. They're matching highs, so you could use that one, but it's not perfect. There's a little bit of stem there. Let me back out a little more. There's a little bit of stem there, and it does make a little higher low, but that's an inside bar. So just wait and see if you get a lower high here, and you do right here. And originally on my first chart, I had to reload my chart because of I had some issues with that new those new headphones. So I had to restart my computer, and so I had to reload my chart. And I had a nice bearish bar there the first time. That's still relatively bearish. It's close. So if you had a good bar, take that trade. My first one, I had a real bearish bar there. This reload didn't really give me that. So we're looking at historical data. It changed several of my bars. But the better trade, regardless, is you get a failed second entry long right here. And just wait for that to close. I don't know if it broke higher or lower first. I think it broke lower and traded back up and then came back down. So you'd have to break higher first before you're going to enter either way. So just wait for it to close, and if it breaks below that, it's definitely going to be a failure. So and then failed second entry long, and look how it drops down real fast. And then we kind of just start working sideways. That's just a little tight range. There's a second entry short right there inside, and there's just enough room to get out, but it's not back to the EMA. It's not back to the trend line. It's kind of in the odd position here, and we're really kind of going sideways. So you might take that trade because it's a second entry short in a downtrend, but you've already had a break and a new low, so it's starting to get risky. But notice then we get the breakout right at the trend line in the EMA too, and you get that big bearish bar. That's the better place to go short. And then it makes a lower high here and another chance to go short. And our target was down here, so we were really kind of hoping that you're going to push on down there. It doesn't. It bounces here. And notice what happens. Notice how it pushes right through that EMA. You don't get much resistance. It pulls back. And then it tries to go higher a second time and turns down and fails. That's a failed second entry short. Looks like a type of a reversal. If we break higher there, we're probably going to run back up here and test these next highs again. And there it goes. It comes back here. You don't get a setup. But notice here you get another pullback first entry. And that's your first break of that. It's a little spike in channel. That's your first break. And that's a second entry long, relatively decent signal bar. And you expect it to try to test that high. Doesn't quite make it there. And you actually could go short here because you've had some resistance right across there. Notice that resistance that's been across there all morning. And we just barely got through there and barely got through again, and it turns down. And look at that big bearish bar. And that is a second entry short. Notice that low, first entry, second entry. And you could really look at that as a failed second entry long. It technically, by the rules, it doesn't fail. But with all that going on, I like going short there. And you're just hoping it comes back to the other side or continues lower for that matter. And it runs on down. It's tempting to want to go long down here, but there's not enough evidence that we're going to bounce there. I mean, we bounced there a little bit early, but that was it. That was just after midnight, 1 o'clock in the morning, Central Standard Time. And we're all the way back here. This is like 8 or 9 hours later. So there's just not enough evidence yet. So I don't think I would take that trade. You could call it a second entry. It's first entry, and it's that little push lower. You're way away from the EMA. There's a higher low here, and I didn't mark it either because it's straddling this one bar trading range, and you don't know how this bar is going to end. And when it does end, it's too close to the EMA. So I don't think you want to take that. But when it comes back again and tests that, it gives you this big bullish bar, and it's technically we turned down there on the second entry short, and that's the first bar to break higher. It actually reached a second entry. It's kind of like the other one. It doesn't technically fit the rules, but if we reverse here, we're probably going to get at least another leg up, and we may be going back up here. And look at it go. It actually pulls back to the trend line here, but that's too congestive. You probably couldn't have got in that one either. It gapped over. You could have maybe got in here, but you definitely don't want to be going long right into that resistance area. Even though it pushes through, you don't want to risk that. And you don't really get a chance to ride this one back. Notice you had a little close outside there and a new high. Then we trend down here, and you way overshoot this thing. Then you get your break. And you could look at this as a second entry long too. But you don't know that we're not going to still try to test that low. And this looks a little congestive. A few of these don't have any bodies on, and this one doesn't. So I'm not crazy about that one, even though it worked. It does get a little support here, but you would figure we may still try to go lower. And you notice we did try to go lower again. And then by that time, it's pretty obvious we're kind of going sideways. And notice all that resistance, and you get that little break higher. I like going short there. We come back down. If you get a good bounce in here, but you bounce I mean, look how many times we tested that. And then you get a nice little bar with plenty of room. That's where you'd go long. At least on my chart. You might have had something in there set up. And somebody asked me about this. They went short right here, which I can see why. I like that. That's what you're looking for. But you do have this little bit of a trend up through here. Notice how most of these bars are going sideways, sideways. I mean, you could draw a trend line on these, but notice these bars are trending. So that's a trend going up through there. So you've got to be a little bit more respectful of that line than you would on these others. Because this is more of a range, and you just want to play the range here. And this is more of a trend. Now, but if you get a lower high, of course, take that one. But you don't get the lower high. So if you did get tripped up there, I mean, anybody could get tripped up on that one. So just keep that in mind. But notice the difference between what really looks like something trending and something kind of going sideways, and then look at these bars, how they're making higher highs and higher lows. That's a trend. So just keep that in mind. That's about the only thing you could use to filter that out. Other than we made a lot of consistent highs, then we broke higher once, but we're still closing back inside. So, and you could look at that as a multi-test right there. So it'd be easy to get tripped up there. But if you entered here and it did this on the next bar, now you got 1, 2, 3, 4 stacked up, and a couple of them don't have any bodies. I'd probably exit. I wouldn't let it go higher and probably stop me out. That's one time I'd probably monkey with my stop and not let it stop me out. But originally I had this line a little higher. I'd moved it down there somehow. And then you just measure that move up, and that gives you the measured move up. Where to look, expect that to go. We ended up going a little higher on a little failed breakout, and you just don't get a chance to trade that. You get a lower high here, you might enter that, but really there's a lot of support right there. But when it tries to go higher again and you get them trapped on a failed second entry long, then just go short there. And I think somebody asked me about a long right there. I mean, you could have gone long there. It would have worked. You could have got a scalp out of that, but this feels like right in the middle of the range, even though this does too, but you got that 3 tries to go higher and you still got room to get out there. That's the only reason I like that one. And you don't know that it's going to drop off like that, but it does. And we work back here, and here's where, again, you'd wait on a lower high. You notice you got that first one there, and that's a relatively bearish bar, but look how it's kind of going sideways. There's a little bit of a trend up through there. Right up through there probably. And but then you're just kind of going sideways, and you can't trust that because your lows are right here. But when it breaks higher again and turns down, just go short there, because that does confirm the trend line really. So when you get that lower high and it breaks higher first, that's a pretty good setup, and that takes you in the 2 o'clock hour. So a few people told me that they had a lot of trouble today, and probably just because it's mostly sideways. And if you don't see the range and the sideways stuff, you're probably going to get tripped up. And you can still get tripped up on this stuff because people want to trade it like trends and stuff, and you really can't. I mean, if you get a trend in there, by all means trade it, but let it be a good setup. And when you're going sideways, you just really have to switch to the range rules. And somebody says, well, they're having a hard time seeing these. Well, when you start seeing bars like that going sideways, I mean, that's what we're talking about. There's a bunch going sideways right there. Just stay out of that. You know why here? Because you're so far away from the EMA, you know that prices are struggling to go lower and they're about to snap back. Then it goes to the other side and kind of does the same thing. Just remember the prevailing trend. And a lot of times what happens when you trade into these little areas, when you succeed on the way out, you're going to go out the way they traded in. Now, here's one that didn't. We traded up into that, and it went down. But notice we traded down into here, and it succeeded going lower. Here's one we traded up in, and it succeeded going higher. Same thing here. We kind of traded up into that little bit, and it went higher. Here you traded up into this, and it took another leg up. Now, here's another one. We traded up into this, but it failed and turned back down. But generally, the way you trade into it is the way it'll succeed on the out. Notice we traded down into here, it breaks out and goes lower. So just keep that in mind. I mean, like I said, nothing is ever 100% in trading, but we know what it's going to do 90% plus of the time, and as long as we stick to the rules, we're going to come out ahead. At least that's the plan. Doesn't always work out that way for all of us, but that's the plan. So there's one other thing I wanted to share with you, and I'm going to wrap this up because I'm getting at 25 minutes here. Another trader sent this idea to me, and I think it's a great idea, but what I'll notice with most traders is they'll send me their chart and they'll have all these trades marked, and they're all second entries. And most of them work, but there'll be a few failures and they're scratching their head. Well, if you just trade second entries and that's all you did, you probably could you'll probably win more than you lose. But the problem is if you're not reading the chart and trading the second entries at the key entry points, which are the trend lines, and normally when we're in these ranges, tight ranges, you're not that interested in second entries. But if you get a setup off this low to go long that is a second entry, that gives a little more merit. Same thing if you're trying to go short off the higher range. You don't really look for second entries, but if you get a setup and it happens to be a second entry, it gives it a little more credence. So look for the second entries at the key entry points. If they're in the middle of nowhere, in the middle of a range or something, they're going to fail on you more. And what this trader said that he did that really opened his eyes was he went and he circled all the second entries he saw on the chart without anything being on the chart, just looking for second entries. And he looked to see how well they did. Then he went back and he drew all his support and resistance and trend lines, and he looked at the second entries that set up on the key entry points based on drawing his lines, and then he had hardly no failures. Where in the other one, he had a lot of winners, but he still had a lot of losers too. And so try that. See if it works for you, and maybe it'll give you a little hindsight and kind of open your eyes. But that's what most of you are doing. You don't have a clue where prices are going. You know the you hear me talk about second entries and two-legged corrections, and that's what you're looking for, and you're just trading them. And yeah, they work at a high clip. They're very powerful because the market tends to move in twos. So once you get two legs in one direction, it's going to trade a little bit in the other direction, and it's pretty easy to get a scalp off of it. But at the same time, it's not flawless. It's not perfect. And if you can't filter your trades by reading the chart, you're going to have a lot more losers. But if you learn to filter your trades and then use second entries, man, you're talking about beyond powerful. And that's the whole idea, is to learn to find these key entry points. And again, I say this all the time. People say I repeat myself a lot, and I do, and you'd be shocked how many times I'll say something and somebody never hears it. They'll say, why did you never say that before? And you go back and listen, you'll hear me say it hear me say it 100 times over a couple of weeks. Key entry points. I know most of you've heard me talk about that. That's your trend lines and your support and resistance lines. Horizontal. All a trend line is a slanted support and resistance line. This is your support side on the way up. This is your resistance side, and this one will act as support and resistance off and on. Coming down, this is your resistance side, this is your support side. And what do prices do? They go back and forth. Here they couldn't get through the midline, so that's telling you it's losing momentum. And what does it do right here? It goes back and forth until it gets a break and it moves up and turns back down. Same thing here. It's going back and forth between those support and resistance lines. And if you learn to spot this stuff, look at this trend coming down. What is it doing? It's going back and forth between support and resistance. That's all it's doing. So keep that in mind. Find those key entry points, but give that a shot. See how it works for you. See how many second entries you can find and circle them, and then come back and then draw the lines on there and look at where the best ones appear, where the big moves will happen. Look where all these big moves happen. Right here, and then right here. You get another decent move here. Look where this big move off resistance. Look where this big move happened off the support. And if you just look where all these big moves happened, right off the key entry point, the trend line. So if you learn to enter there, you're going to get better entries. You're going to get more runners. Your trading is going to be better. But, I'll see somebody try to enter a second entry right here between a midline and a EMA. And a lot of times it'll work. And they'll say, well, that was a great trade, wasn't it? And I'll tell them, no, that was a horrible trade because you shouldn't have entered right there. But it still worked. You just got lucky. And it's not what they want to hear, but it's the truth. And so make sure they're setting up at the key entry points, not out here in the middle between a midline and a trend line, or way over in here between this side and this side, especially trying to go higher, because we just came off this side. We're probably coming back to this side. Notice here we came off here, we got back to the midline, but we didn't get back. Before we went higher again, we came back to that trend line. And then we took off again. But that's where all the magic happens, at those key entry points. So it's 30 minutes. I'm going to wrap it up. It's longer than I wanted it to be, but hopefully you learned something today. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.